You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Enbridge Inc., the North American energy infrastructure giant, has been drawing fresh attention from analysts and investors alike. Recently, the company's stock received an overall rating of moderate buy from 11 research firms, reflecting a mix of cautious optimism and steady support. Out of those firms, 6 analysts issued a buy recommendation, 4 suggested hold, and 1 went as far as to give a strong buy. Put together, that consensus lands Enbridge in a favorable but not overly aggressive investment category. The average 12-month price target for the stock has been set around $60.50, which signals a solid upside compared to where shares currently trade. As of the most recent update, Enbridge's stock was up 1.2%, opening at $48.39. That price hovers near its one-year high of $48.59, and well above its one-year low of $39.30. For many investors, this stability is notable, given that energy infrastructure stocks can often be volatile due to regulatory and commodity price pressures. Institutional confidence in Enbridge has also been clearly visible. Major firms like Vanguard, TD Asset Management, Goldman Sachs, and Deutsche Bank have all increased their positions in the company. Collectively, over 54% of Enbridge's stock is owned by institutional investors, which tends to provide additional confidence in long-term performance. From a financial standpoint, Enbridge continues to post results that reinforce its appeal as a dividend play. In its most recent earnings, the company reported 47 cents per share, topping estimates of 41 cents. Revenue came in at $7.14 billion, which was lower than expectations, but still reflected stable operations across its pipeline and energy infrastructure network. Net margins were reported at just over 10%, and return on equity stood at 10.77%. What stands out most for many income-focused investors is the dividend. Enbridge recently declared a quarterly payout of $0.6839 per share, representing an annualized dividend of about $2.74. At today's prices, that translates into a yield of 5.7%. In other words, not only is the stock providing price appreciation potential, but it's also delivering a meaningful cash return to shareholders. The company's dividend payout ratio is high, sitting around 135%, but management has consistently emphasized the reliability of its distributions. Analyst commentary continues to range from cautious to bullish. RBC has reiterated an outperform rating with a price target of $67, while Argus raised its target from $50 to $54. Other firms like National Bank Shares and BMO have offered more neutral sector perform and market perform ratings. This range of opinions highlights the balancing act facing Enbridge. It enjoys predictable cash flows thanks to its regulated infrastructure, but it must also navigate ongoing regulatory and environmental pressures that can delay projects and increase costs. In short, Enbridge is being seen as a steady, dividend-rich stock with moderate growth potential. Analysts are not unanimously bullish, but the prevailing view is that it deserves a spot on investors' watch lists. For those seeking stability, income, and exposure to North American energy infrastructure, Enbridge remains a name that is being steadily recommended. Stay subscribed for more videos.